let me try to share again.
Okay, let's see how it goes. There we go. Yeah, it's always a work in progress, I feel like.
Okay. Okay. What? Okay. Can you see my screen?
Yes.
Okay. Um. Okay. So let's go here. Okay. You can see the scorecard on my screen.
Yep, there you go. Yep, I see the scorecard.
So we'll go to Liberty Park,
Okay.
and so we'll open up the underwriting template. And so with this one, they were asking a 95 a door. The numbers are really low for not at 95 a door based on my underwriting. Um, so when I go, I got the T12 in here. I got everything mapped the way it's supposed to go here. When you go here, everything checks out perfectly. And I also have the interior upgrades at 2,000 a door. But you know what I thought about after I underwrote? I actually thought about this morning. Was that I have upgrades to 67 units, and I don't think we'll upgrade all the units because we want to leave some meat on the bone for the next investor, right? So because of that, I think I want to change this down to maybe half. And so I just wanted to see what your thoughts was on that, because then that might boost up the numbers as well because it's less money that we're raising. Um, then the next thing, when I come over here, I got my rent roll in here mapped out. So then we go to our comprehensive tab. And so it has, see how low the IRR is low. It's just a low deal unless I drop the purchase price, which it looks like the purchase price might have to be dropped in half. So I just wanted to make sure I'd done everything correctly on here. Got my comps in here, my renovation schedules in here on let's see, on yep, right here on step 11 has my reno schedule, and just wanted to see what your thoughts on it. Also, this property is low income until next August, and then you can raise everything to market rates as well. So that can also be a plus.
So a couple thoughts. Number one, go back to the property tab and let's talk about the value add, the amount for upgrades of units down there for the interiors. So
Mhm.
the way, just to give you a background on the template is set up to help newer students, which you're not, to help newer students not forget that piece. So see up above on 06 or whatever that is, where it says we're going to raise rents by $100,
Mhm.
right there. If the formula is still in there, now click on that $2,000, and it may not be in there right now, which it's not. Okay,
Yeah.
so what normally happens is it'll take that $100 rent bump, and there's a sort of a rule of thumb that if you're going to get $100 an increase in rent, you're going to have to spend, it's going to be 15% of what you spent to achieve that raise, if I'm saying this right. So whatever number you would spend, right, it would be 15% of that would generate that bump per unit. So this template is a little bit generalized. It's got $100 raise per unit across all of them, right? Which may not be accurate. It's just sort of a generalized number.
Right.
And then it's generalizing those upgrades. So you're welcome to do exactly what you did. Just go ahead and type over it. Like, let's say you're planning on doing 30 units and it's going to be an 8,000 per door or whatever it is. You can always type over those and put in what you need. The interesting, or maybe the downside of this is why you have to sort of download and use a new template every time you do the next property. In other words, because some of those formulas will get pushed out. They're in there initially, and they're made to initially generate numbers and then allow you to go in and type over top of them. You just have to remember on your next property to start with a clean version of the underwriting template, which isn't so obvious to all of us. A lot of times we'll just, pull up an old template from an old property and start typing on it. And so that's a disadvantage with this template. You have to start with a new, fresh one each time.
Well, what I did was I downloaded the template and I just keep it in my downloads, and I don't even open it on my computer so it doesn't ruin anything. And I just load it into the drive for each property. And the
Yeah.
reason I lowered it to 2,000 was, and I think it was because of the oops, wrong one. Let's see, where's the property at? Oh, let me go back. Let me part. I think it was because based on the OM, it was some low numbers. But then I also looked that it only needs like paint and hardware for the cabinetry, and I don't even think it needed the flooring if I remember correctly. I mean, it was like really minor stuff that I felt it needed. I mean, of course, I feel like the exterior can be painted, um, to give it like a fresh look. But I think I was going off whatever it said in the OM. So if you look here, I mean, I know with these shaker style cabinet doors, if we paint them white, put some handles on them, I mean, then again, we have to change the appliances too. So I'm not sure if I budgeted for that. And yeah, the floors, I figured the floors were good enough. So
They
paint,
look nice in the pictures.
they look good. So paint the cabinets, paint the walls, put some hardware on the cabinets, new appliances, which would actually be more than 2,000 door if we had the appliances. But I'm not sure if I added, because I think there was something on the comprehensive for appliances too. What isn't there?
Yeah, so when you switch over to the comprehensive, again with this model, is it allows you to sort of rethink all this under the comprehensive term. So yeah, it does look like there's something in for
In there. These are for washer dryers, but I didn't add it. So technically,
right.
yeah, it should be a little more for each one because I didn't even realize that. So I'm glad you pointed that
And
out.
then there's a couple theories on this, at least from my perspective. One is you put in the minimum amount of upgrades you want to do, and that helps you get sort of your IRR numbers looking better. The other is if those numbers look good enough, you go back and sort of put in everything you want to do. You raise as much money as you can, knowing that that's the maximum. And sometimes even we would close on properties without that raise done, which we've talked about before. But that would allow us sort of a cushion in there. And then a lot of times we would raise all the money, buy the property, start renovations. And just like you're saying, we would barely get started on that one property. We didn't get started at all before we sold it. So that money just sits there and gets returned to investors at the end of the project. It's kind of no harm, no foul, and probably you're making enough money that you're paying a return on that money anyway. So I always liked it when we were going conservative in terms of raising more money than we needed. That was always the better way to go. The opposite is a tight spot where once you get that property, it's very difficult to get any more cash to do anything. So if you come up later and go, we need another 300 grand, even that starts to become problematic, right? So
Right.
I like the over raise idea. Okay,
Okay.
so that's great. Now, so when you look at let me ask you this. Go to the cash flow part of the model. I think it's not step 14. Slide over to step 14.
Okay.
Okay. What do you have market rents growing at?
Um.
Up at the top.
Oh, here we go. 3%.
So we've talked about that. I say drop in 8 and let's see what happens.
You said 8? Oh, you did say that.
And that's, Jim Stewart, one of our favorite sponsors, right? He's running around saying he's dropping in 6 to 8%. Look at that, David. Look at that. This is the inflationary trend of properties right now. This is what you're talking about with those watches. The only advantage of these properties over the watches is I don't think you get the same tax advantages of those kind of investments,
No.
And I'm telling you, that's a problem for all of us. If you think about how much you paid in tax last year, if you could zero that and keep all that money, I
Yeah.
don't know what your number is, and you don't have to say it, but just think in your mind how much of a raise in pay that is for your family if
Yeah.
you paid zero taxes. It's a huge amount of money for all of us. And that's the problem with this business. All of a sudden we look around and we get all cranky that we're making too much money.
Yeah. Yeah. I mean, your biggest expense in any business is your tax liability. But with 8%, I mean, do you think things can change in the future? Because wouldn't you want to be conservative?
Now we're back to this game, but I'm telling you, your competitors are underwriting this at 8%. I'm
Wow.
telling you, they're dropping in. Rents are growing. Where's everybody going to live, David? I mean, is the market really going to crash? Are people just going to stop paying rent? There's so much extra cash in the system from government, pumping money in. We've pumped in so much more into the system. Rents are going to raise. It's inevitable. We're watching it happen, before our very eyes. This one might be a little bit limited in terms of what's the class of this property. Is this one a B or a C maybe?
Let's just see. And that was another thing. I decided to underwrite it anyways because you told me some of your best properties were C and D areas.
Yeah,
So this
I
one is
love
a
the
C
Cs.
property, but on RE indicator, I believe it's in a D. I'm logged out. I believe it's a D neighborhood on RE indicator.
Yeah,
But it's like on the cusp of a D and C area. Let's see.
it looks clean. I know we haven't visited it, but sure looks clean.
So here it is here.
Okay, so remind me, blue is a C?
Blue is a D, green is a C. So it's a D neighborhood. But I
Got
would
it.
say it's a C property. I don't know if
Yeah.
you can do that, a C in a D neighborhood. I don't know. I don't know if it's in a D neighborhood.
Well, what you really want is a D property in a C neighborhood, so you can bring it up and get the advantage of that. So it's when it's opposite, it's not as good. But I always question these two, David. These are, if I look at this and I see a freeway or a railroad tracks running between the designations, then maybe yes, I believe it. But if it's just a transition in neighborhood, that doesn't happen on a dime. It's well, sometimes it does actually. Sometimes it does happen on a dime. But anyway, so that's a maybe. Okay, so keep going on this. Tell me more about this one.
Excuse me. Okay.
How many units are you planning to renovate in the first year?
What did I do here? So I did 10 in year 1, 9. So I did this over a 5-year period.
Okay.
10, 9, 10. Oh, I guess I didn't do it over 5. I did. So yeah, I only got. So I did do exactly what I said I was gonna do, which was not all of the. Wait, is that all of the units? I guess it is, huh? No, I left 38 units unrenovated.
Cool.
Leave some meat on the bone. But
So
with that being said, I should change these numbers here, which would help bump that up, right? Bump up my returns.
a little, yeah, but remember, this is CapEx. CapEx is outside of your CapEx is outside of your NOI divided by cap rate, calculation. So that's another reason I love to maximize CapEx, because it doesn't necessarily, raising a lot of money does start to hurt the cash on cash, because you're putting in more money and getting less out, but it doesn't necessarily hurt the IRR, the percentage return, if that makes sense. I might not be explaining that well enough or at all well.
I understand what you're saying.
I'm tempted to have you, I think you're being conservative on construction here. Bump up your year 1 to 20 units. Do it 20 units a year.
Okay, let's see what happens. So we'll do 5, 10. We'll do another 10 here. Oh wait, what did I do? Oh, there we go, 15. So I meant to do 15.
Okay, that makes that 20. Go to year 2 and make that 20 also for year 2, because you probably can do 20 units. If there's 100, what's this one? 87?
I
Or
believe
108? No, this is 87.
67 or let me see. It's 67 units.
So yeah, I'm probably being too aggressive here because you have to wait till people move out, and it's probably not going to be 20 a year. So I'm sorry on this one. I was thinking it was the other two properties are a little bit larger.
Yeah.
So yeah, you had 10 in the first year. Okay, how about 15 in the first year? But that's still 25%-ish of the entire place, or 22%. So that would be aggressive, but let's see what 15 is.
So 15 the second year as well?
Yeah, try to do 15 each year and finish them up by that fourth year.
Let's see. Let's review.
And I think I would run the analysis showing that you're renovating all of them, even though you know you're going to start to get offers on this property 1 and 2 years in, and you probably won't actually do it. So part of me thinks that you run your analysis showing that you're renovating all, even though you're really in actuality not going to renovate all, and you probably won't have to,
Yeah.
given our current, state of the economy. I think inflation is so heavy with these properties right now. What's that do? So 17 and 24, is that making our percentage go up
Yeah, we're at our IRR's at 24%.
for
24.
project? Yeah, and 17 for investor.
Mhm.
Okay. So, what's the risk of this one? What's the downside of this one?
Downside, I believe, is the neighborhood.
Okay.
Um, that's the biggest risk, I believe, is the neighborhood.
Have you traveled to these parts? Have you been through these neighborhoods?
No, but I've heard of South. This is in South Dallas, so I've heard
Mm,
of the area.
mm.
So we would have to get a team member down there, or I could fly out. Well, actually, I wouldn't be able to because offers are due on
You
that.
know who's in Dallas is Tarina, and she
Right.
said she'll be boots on the ground for you. She'll
Okay.
drive places. Yeah.
So you think this could potentially be a good deal?
Yeah, I think you should submit an LOI.
All right.
Yeah, now what's your what kind of LOI do you have so far? You have a format that you use that you fill in? What do you got?
Yeah. So I use pretty much a template from my coach from RE Mentor.
Perfect.
Yeah. But if you have something, if you could send it to me, I would love to take a look at it as well.
I'm making that on my list too right now. Yeah, I'll send you my copy too. When's this one due? Is this the one that's due December 8th?
Yeah, it's due on the 8th, and so I gotta fly out of town on the 8th as well. But
Okay.
if maybe if I could call Tarina and get her to look at it prior, then that would be great.
Yeah, so put that on your list. So we're working on some to-do list stuff here. So click back to the I mean the L10 document,
Okay.
and go down to do under David.
Okay, so delete this.
Yeah, add some things. Let's see. That one you can line out because it's done, right? We did that by 12/2. That was by today, and I think we went through all those properties by today, right?
Yeah, so let's see. How would I forget how to line.
So highlight it, go up to format.
Um let's see format. Why am I losing my mind today?
Where's where's your, I don't see your menus up there.
Oh, you know why? This is under
There
my
must be.
that's why. I don't know why it opened.
Oh, yeah. There you go.
Closed
That is so weird. Yeah.
it.
Um, Chrome has gotten better at that, but you have to separate them into separate windows. Open one window and you can have a bunch of tabs in there under one login. Open another window and do your other login under that, and it'll keep them separate. But now you have to go between the two windows.
Yeah. So where do I go?
So highlight it,
Uh-huh.
go up to format,
Uh-huh.
text,
There we go.
and say strike through. Boom. And then add for yourself. Now, the only problem is the next items you add will be struck through. You'll have to unstrike them through, but add for yourself. Consider LOI on Liberty.
Okay.
Under that, under mine, put under my to-do list, because you can do this with your team. You can, as you're going through these meetings, and people are talking about, I'm going to do this, I'm going to do that. Anybody can go to this document and start adding to each other's, going, hey, Max said he was going to send over his LOI template, so put that on Max's list, right? And this becomes, your team members kind of have to check back at this L10 document in between the weekly meetings if they forget what they said they would do. But this is where you hold team members accountable too. If they don't get these things done, I'm telling you, some companies are pretty ruthless about, hey, you said you're going to do this, make sure you do it, right? That's the be realistic, be reliable. And then if somebody says to you, I can't do it, of course you can consider that at the time, right?
Right.
So under yours also, put call Tarina to drive by Liberty and see if that's possible.
Okay.
And I'm tempted, I think we have plenty of time to do this. Are you able to go to your email and see if you received an invitation from me to Anthrobank?
There it is.
Set a password for yourself. I don't think we're going to see it. Yeah, good. We don't see it. Okay, click My Courses up there. Just go through these tabs. Click My Courses. So this is kind of like you're in the Geek group and you're in Underwriting. Actually, I don't think you're in Basic, by the way, David. I think you're an Advanced Underwriter student at this point, okay? So I keep saying Basic. It's just that I was doing classes on 1 day a week or whatever. Okay, so I don't think that's accurate. Click Cohort now. So scroll down. And these are all your members. These are all your fellow members. I got a test member in there. That's a test student right there. These are all your fellow members in the Geek group. Okay. And you're able, go up to the top where it's search. See how it says home city?
What do you see? Oh, yeah. Yep.
Do select, type in Dallas. Click Dallas and hit search. So see, I don't have it set right because Tarina needs to go in and update her home city as Dallas, right? So it's not complete yet, but the theory is, hey, I'm looking at a property in Dallas, who can go see it, right? The other thing to do is see how there's a status for each person.
Yeah, this says Rosewood too. This is not right.
Yeah, so you're gonna, hang on 1 second. I'll show you how to fix it. Hang on. Before you do that, go back up to the top.
Uh-huh.
Do a search under status. Where's status? Is it on there?
Status?
Yeah. Go to select and,
Okay.
and see the boots on the ground in my home city.
No, where do you see that at?
Two
Oh,
more
yeah.
down.
I can be boots on the ground for you in my home city.
Yeah, click that and hit search. So my theory is this, that certain, now here's the theory, right? Say there were 100 Geek group members, you'd be able to figure out who's got a home city of Dallas and who's already said, I'll be boots on the ground in Dallas. And you can literally now call those 3 or 5 Geek group members and go, hey, I'm looking at this. Are you able to go see it?
Yeah.
That's my theory here. Okay. I don't know if it's working yet. And you're like the very first student even to log in. Okay. Now go up to my profile, click the next tab. Okay. And I want you to correct some things for you. First, David Selvin's right. Email's right. Cell phone's right. Correct your city right there.
Okay. City is Brentwood.
Now, here's a problem. It's not in there. What is your city? Your city's Brentwood what? California?
Well, you know what I like to do all the time? Because even though I live in Brentwood, a lot of people get it confused with LA Brentwood. So I usually just say Oakland because it's like the closest.
Let's see if Oakland's in there.
Oops. Okay. Oh man, it's No, it's like,
So is Oakland not in there?
well, I don't know. It's like my thing is getting in the way here.
Is that what's happening? Something weird's happening.
Can't
Let me
see.
see mine too. Let me
Oh,
see
there.
MSAs. Let's see. You found it?
Yeah.
Okay, cool. Okay, so you can upgrade to your home city, and now when other people are looking, they can find it, right? How come Oakland should have a California on it too? Because believe it
Yeah.
or not, there's different Oaklands, you know?
Right.
So some of this isn't, this is still a little bit, it's a work, this is going to be a work in progress for quite some time. But let's see, we've updated your city.
Yeah, they don't have it under California. I'm looking here.
Let me see
Unless
if
I do
my,
San
what it
Francisco,
looks like.
I can do San Francisco as well, which is San Francisco is like an hour from me.
But you could be boots on the ground for,
So
oh,
I could be boots on the ground for anywhere in Northern California, from San Francisco to Sacramento. San Francisco and Sacramento is the same drive distance from me. Oakland,
okay.
even I'll be willing to go to Fresno, which is a 3-hour drive.
So the
But
interesting thing is I updated Oakland to now have a California on it. I'm tempted for you to hit, go up and hit refresh the page up there. Go down and do Oakland again.
I heard it.
Now, it won't, the reason it didn't take before is we have to hit save. How about your status? Click my status
Mm, what do you
right
see?
below city.
Oh, okay.
Click on that. Which one of these apply to you? For example, could other Geek group members text you to set up a call? Is that okay?
Yeah. Yep. Set up a
What
call.
other of these items fit you?
I'll be. I can be boots on the ground for a large radius around my own city.
Hmm.
I'm looking for value match partners.
Hmm.
Mining properties. When you are in my home city, let's definitely have lunch. Uh, we boots on the ground for you in my home city, and I'm best at probably calling brokers. And I think that's cool for now.
Okay. Now let's see. Your 5 sentence bio you can update later. Um, Currently reading and want to read, those aren't going to be totally ready yet, but go back to them later. Go down and hit submit. And now when you go back and click my cohort, you should see your profile updated.
Okay, let's go down here. Yep.
And so now when others are searching, for California or whatever, the theory of this whole thing is, and I'm looking for other status tags there. If you go, I could use a different tag on that. And I might make them able to be created by people, but I'm not sure how sophisticated I'm going to make it. So it might be a little bit limited, but do you see the idea behind this? And then click my books
Um,
tab at the top. So you don't have any yet because they've got to be set up, and you're going to put in, I think this is going to be where maybe you search other people that are, you're finding out what they're reading. I'm not totally sure how this is going to work. Oh, it's back on my cohort, what people are currently reading.
oh, my cool.
I just keep thinking that maybe when people go to select their next book, is it on there?
Yeah, right here at the end.
Yeah, it is. Okay. And it's limited right now because I don't have a lot of titles in. But I think people would be like, I'm going to read that book because 3 or 4 other people are reading it right now. Might be what I was thinking. And then click VM suppliers.
Okay.
I'm going to try to talk to suppliers that are going to sponsor the Geek Group. And I'm going to have them pay a monthly fee and maybe even offer Geek Group members discounts for whatever it may be. Maybe it's property management. So I'd like to have a couple hundred, suppliers, say it's property managers in different parts of the country, where you could search out these people and go, who's a sponsoring supplier for, say, cost segregation, right? And I can call 3 of them off this list is my thought process.
Mm. Okay.
Anyway, does this
Yeah.
whole thing seem interesting to you?
Yeah.
You
Yeah.
know,
Just the fact that I could just click this and see everybody who's, a part of the group and just reach out to them really quickly. That's pretty cool.
yeah, you've got their cell phone and their email right there.
Hmm. Okay.
And the sort feature, not sort, but I guess the search feature would allow you to, say it was groups of people in different, say there were 3 people in the underwriting class, right? You could search those, just say underwriting class and see who pops up in that, and then have direct access to them. So it won't be perfect, but it will be maybe more helpful than we currently have. Maybe that's what I'm trying to go for.
Yeah. More organized.
All right, okay, so I appreciate you going off on that tangent with me. Thank you, because it helps me to see it from your perspective and kind of see how you react to it, slash how hard it is for you to use, slash type thing. You've got 2 other properties. What's your next property?
Well, real quick before we switch to the next,
Okay.
I just had a quick question. So when I submit the LOI, I mean, what's the number you think I should be right around to submit it? Right at 6.3 or a little lower or
So I think that's
yeah.
up to you to dance a little with the broker.
Okay.
I think you're trying to call the broker and say, hey, I really want to submit an LOI on this. And I do think it's appropriate to ask questions like, what do I need to be at to even be considered?
Okay.
And we've done preemptive offers. We'll ask, and this all depends on the broker and the seller and what their relationship is and what they've decided, what the seller has decided they can live with. We'll ask the broker, is there a number that the seller's looking for that if I did an LOI right now, they'd be willing to take it off the market and sign my LOI right now? And that all depends on where the seller is. If the seller's thinking in their mind, this is a real pain in the rear end, this whole process of selling, and I don't want to go through it, which some sellers do, it happens, then they may give you a number that the seller's willing to accept for that, right? So, and that would all depend. Sometimes the seller will not tell the broker that number, right? The seller's telling the broker, I want as much as I can get, you're dragging this out as long as you can drag it out. So it just depends on what they've decided, together, and their conversations that allow them to be appropriate in telling you that information or not. If the seller said, I want the maximum price, and the broker's going to say the seller's asking for the maximum price, go through the competitive bid process, right? But they'll tell you what their situation is for that property. But I think it's always individual, and it depends on parts of country and what the situation they're in and all those things. That's back to kind of where your business might help you. You just know that sellers are in all different places,
Right. Okay.
So
Okay. And then the last question before we move on was when I was saying about the low income housing tax credit and how it's up
yeah,
in August. Is that going to be an
yeah,
issue? Because I know there
yeah, it
was
might,
deed restrictions.
yeah,
With
yeah, it might.
okay.
A lot of that stuff though, we're just not going to know until you start to go through some sort of more in-depth process, right? So the LOI's purpose is to get out there, to get in on the bidding, and then start to find out more information as you roll through the process.
Okay.
It doesn't preclude the idea that you get into an LOI and now you find out the real numbers and the real dates and the real everything. You just almost never know all that before the LOI. So you're submitting an LOI somewhat blind. You're submitting it with the, if everything is as I see it kind of thing, here's what my offer is. But there's plenty of opportunity to go back later and go, well, that date's going to shift. So that shifts things a little bit for me, right? And
Gotcha.
I think the chances these days of an LOI even getting accepted is so crazy that you might as well submit it and they'll turn you down anyway, and you'll submit 10 before you even get down the road on those questions.
Yeah. Okay. All right. Well, so the next one would be well, let me go back to the scorecard. Would be Wedgwood Heights. This one, my numbers are negative on it right now. So I'm not sure about this one here. We'll go to That's weird. It was in a different order.
It was sorted upside down. There's an arrow up at the top of that file, and you can do,
That's
yeah,
what
see the arrow? Yes, yeah, click, there you go. Yeah.
Okay. So Wedgwood Heights. So yeah, like I said, the numbers are negative, so I really don't think this is a deal. The whisper price is 12.5 million, so it's about 115 a door. And yeah, at those numbers, this one I believe was in a C neighborhood. Where's my RE indicator?
See column U right there?
Oh,
Okay,
let me
go ahead.
Uh-huh.
Column U is set up to allow you over to the right. There you go. Yes. So that's taking your calculation on revenue minus expenses for the NOI, right? And then dividing it by cap rate and getting a valuation. So
Which is
based on your numbers, put a different cap rate in there. Like I think cap's set at 5 right now. What does the cap have to be to hit their $12 million? Put a 2 or something in, right?
say like a 2. Yeah. There's a
I mean, and now
unless I did something wrong on the T12, I mean, and that was the thing too, is their T12 was real funky. Like look how small this is. This is 108 unit property.
Yeah.
And it's like really simple.
It's
12, like
that's
it's
bare bones, right?
yeah.
Yeah,
So
I always start to worry that we don't have the full information on those smaller properties. And sometimes, they're not, like we said, in those smaller properties, 50, 100, you should be able to afford Yardy though. Once you get up to 100 units, and your accounting, your bookkeeping should be a little bit more than this.
yeah. Yeah. So that's what kind of bugged me out on it. But so a question is, when I'm underwriting, before I go full in depth and do all the steps on the comprehensive, should I play with this column U here? And then if it doesn't even match up like this one, just say forget about it, or what's your thoughts on that?
Yeah, maybe and maybe not, but column U is designed for you to be able, say the broker won't give you a price. Say the broker won't say 12 million. Broker says, we're not going to tell you what the price is. It's, market, right? And you ask, well, what are comps selling in the area? And they won't tell you that either. Then at least ask them, well, what's the cap rate in the area, right? And a lot of times now they have no risk in telling you that because they're not worried about any kind of violation of any kind of seller confidence or anything. They're like, well, cap rate in the area is average at what, right? So is it really 2 in this area? I imagine cap rate in this area is probably average more around 4 or 5. I think right now in the nation, 5 is sort of the average going on. So that's how you price out. Like, let's say they wouldn't tell you 12 million, but they'll tell you 5%. Now you can run the numbers on that column U and then go back. That's the way Justin does this all the time. Brokers won't tell him numbers. He'll go do it over on column U and then come back and put a price in that matches that, right? So my only curiosity is with the comprehensive, and I know what you're trying to do, and all of us underwriters try to do this. We try to figure out a way to spend less time on each property. I just don't know if it's possible because isn't your brain curious about the pro forma and the hold period? I mean, if you hold this for 5 years, maybe it's negative in the first year. Nowadays, everything's negative in the first year because people are asking crazy prices, but they're doing it because inflation is on.
Yeah.
They know that this property is going to be worth a lot more. Probably by the time you get through escrow, it's worth a lot more than you started at. So did you fill out for comprehensive? Did you do
Yeah. So
I see the rent roll tab down there.
rows here mapped out. And this was that property that was giving me a hard time. I mean, if I showed you the original rent roll, I think it's here. So you see how it says modified? Because I had to take it and make it so that it'll work for the formulas that we use. And okay, so look, see how it's table 1, table 2.
Yeah.
So this wouldn't work for what we're trying to do. So I had to kind of piece it together. And then when you look here, it also has utilities and pet rent and all different other things in there that I
Yeah.
feel was already accounted for on the T12. So that took me a long
Okay.
time to format that. But then I did do the comprehensive here. Um, so let's go over to the final step. So the return,
David, does the broker give you a summary of the rent roll in this one?
yeah,
Because remember that option. Your option is to go, the rent roll is too crazy for me to look at right now. Let me just type in, and again, this blows all the formulas, so that's why you start with a new UT every time, which I know you know.
yeah,
But just type in the broker's summary of the seller's current rent and market rent and number of units and square feet, and save yourself the analysis of the rent roll part.
right. Summary. Oh, zero, huh?
Yeah, they might be calling it something else. I like searching too, though. I'm a big fan of searching those ONs.
Summary. It's in here somewhere. I seen it. It's right in
Sometimes, David, they'll call it unit mix.
unit mix. Okay. It's right over here. I was just literally looking at it about a few
Yeah.
hours. Um,
And in fact, on my next underwriting template version, I'm going to give you two separate boxes. I'm going to give you one to type it in on from the OM, and I'm going to give you a separate one to do the full analysis on. And you can skip the second one and just go with the first one. And that's what you can do on this one too. You can just type this in and not have to worry about the rent roll. Would that at
yeah,
least allow you to keep going through the analysis without?
absolutely. Because I started on this last night and it was late. And when I had to do all of that to the railroad, I got so frustrated. I said, "The hell with
Oh
it."
yeah. Oh yeah.
I lit up a cigar and said, "The hell with it."
I'm with you. You'll see my YouTube videos on processing the rent roll. They're like an hour and 30 minutes long. I'm like just going at it. And I'm like, oh my gosh.
Yeah.
Yeah. So
Only
in that
other
case,
thing too
just
is,
type it in.
okay. The only other thing I noticed as I'm filling in the comprehensive tab, certain things that I filled out, like on property one, for example, like mortgage information and things like that, well, it
Yeah,
doesn't transfer over to comprehensive because it's going off the UT. And so I
correct.
change it in here as well as the tax as well. So I
Yep.
have to constantly remind myself to do that as well.
Yeah. Yeah, I'd like to get away from, if when I redo it, I'd like each individual property to be better. Then in the next version, the combo tab is going to be, different. It should be a little bit cleaner next time. And I apologize, I keep saying on the next one, but that's kind of the way this whole thing works.
Yeah.
Well, so let's do some out of curiosity things. How many units are you renovating each year?
So here I got 15 in year one, 17 in year two, 18 year three for a total of 50 units. So it's
So
almost half.
I'd probably bump it up to 20 a year.
20 a year?
Because because that's about 20%, a little bit less than 20%, and you'll probably have 20% of tenants move out of it. That's not a bad prediction
Okay.
to turn over 20% of tenants in a year. So if you make that in,
Okay. We'll just do maybe two here. Oh, actually, maybe seven. So I did 20. So should I do all 5 years or just the first 3 years?
do all 5 years,
Okay.
knowing that when we buy it, we may not do that.
Right. Okay.
Because what this is doing now, see below, as it's shifting more rents into those years because now it's taking the upgraded unit rents, right? So this really helps your analysis. Your analysis is up to 11 and 14% now, 11 for the LP, 14 for the project.
Mm.
And now this is gonna, I know where we're headed with this. Scroll over to step 14.
Okay, you're right.
Let's just try it, you know. It makes things very attractive.
Wow.
Wow. Wow. Wow. I mean, David, don't you think there's the possibility? And I think this is very real. And I think this is what's driving multifamily investment right now and driving these prices. It's the idea that the dollar is forever worth less now
Yes,
than it was yesterday.
yeah,
It's the
definitely.
same thing with those watches you're talking about. The dollar is not buying what it used to. So you got to spend more of the dollar. The dollar's worth half now what it used to be. And so all your money sitting in the bank is losing value by half over the next 2 or 3 years. I mean, literally, we're in some sort of inflationary period. That's crazy because rents are going up. The prices of these properties are going up at unjustifiable amounts for the value add. It's inflation is your only answer to why these prices are going up so high. So is the inflation going to continue? And the answer is there's a very real possibility it is, only because you're just back to the facts. There's a shortage of housing. We're not building nearly enough units nationwide to keep up with the demand. Their dollar is worth less now every day than it was yesterday. So everybody's moving all the money out of the bank they've got into something that's going to help them protect against inflation.
Right.
I just don't see how it, I don't have a crystal ball and I'm not a predictor, and I was not able to predict the 2009 crash. That caught me off guard. I haven't been able to predict the crashes, okay? So maybe I'm a bad guy to talk to about this whole issue. But part of you's thinking, part of me's thinking, geez, I'd be tempted to put an LOI in on all these, right? And I bet if we go through your third property this way,
Yeah, maybe if I bump this up, because that's what I didn't do.
yeah. Play with the rent growth. Go down 1%, put it down to 7, see what it gets. Put it down to 6, see what it gets. Just keep going down. Okay. So that's a pretty big drop in IRR, just given a 1% drop in rent raise, right? That's not too bad. That's a little bit smaller.
And what
So
would you like to see the LP IRR at again? I remember you told me. I can't remember.
I mean, when I'm an LP investor, I want to know when my money's going to double. So 18%-ish compounded would give me doubling in 5 years, right?
Okay.
I wish you'd double my money in 1 year. But so right? That's it. But in the end, if you double it in 4 years, I'm happy. If you doubled it in 3 years, I'd be ecstatic, right? And on some of our syndications, we've made 40% return a year. That's doubling every 2 years,
Wow, that's
right?
good.
So it's possible. We've done it.
Okay.
And then I always look back on them going, I wish I had, $10 million put into that property, because then I would have doubled it in 2 years, right?
Yeah.
My 50,000 is very unsatisfying when I get a 40% return per year, because now I'm kicking myself for not putting more in.
Right. Right. So, speaking of playing with this number made me think about Jim Stewart. I remember when I talked to him, he was also saying that he likes to be involved prior to submitting the LOI.
Yeah.
Do you think this is something I should get him involved in, or what's your thoughts?
I
What is
think all the sponsors love that idea. They just don't have time in the end to track every LOI, And so part of your team's you as a as a syndicator yourself / on a team, the accepted LOI is still the holy grail, right? If you go to a sponsor and say, you know, I got an accepted LOI on this property, they're going to look really hard at that property. Maybe they back out and you can't find a sponsor, right? But for a week there, you're calling every sponsor you know going, I have a signed LOI. I need a sponsor right now, right?
Mm. Okay, because I know also they're gonna probably this guy, this guy that has these. He's actually the same broker that has these two properties. He's with CBRE, so he's a little bit of a stickler, and so I know he's gonna also want to see, you know, schedule a real estate to see that this properties of this size that's already in my portfolio, or somebody who is, you know, helping. So what would you recommend as far as going around that?
Yeah, so that's a problem, all right? And part of it is like, say it's me or Jim, they're not going to give you that stuff to submit with LOIs. Um, and I've been thinking about that a lot. I'm wondering, and this may not work either, but I wish I could figure something out like this. You know, there's enough people on the Geek group that we have enough real estate holdings that we can show assets for all kinds of stuff. And I'm wondering if there's a way for us, and probably I'm looking for a model that I haven't seen yet. You know, I'm wondering if there's, you know, I'm wondering if the Geek group members can say they're willing to be on LOIs that other Geek group members submit as you know, record of real estate holdings. I'm wondering if that's an option somewhere in this. So I'm fishing right here. I don't have a good answer for that. That's why they, you know, that's where this all starts to get into a circular loop. And
Yeah.
part of it doesn't work so well for new students because they're saying, how do I submit an LOI without a sponsor? And the sponsor's going, I don't have time to look at it. You know, where does this go? Then this whole process starts to break down. I think at the very least, you're trying to submit an LOI and seeing if you can get interest without it.
Okay. Yeah, I'll see if I can use my gift of gab.
You know, yeah. I mean, you're trying to kind of work that system and see if you can make this work out.
Right.
Um, and I wish I could get some ideas on, you know, potential, like you just looked at Anthrobank there where you're seeing all the members. You know, one of those tags should be, I have, what would that tag say? I have real estate assets that I can put, this is going way too long, that I can put on a schedule of real estate. I don't know, for Geek Group member LOIs or something. What am I trying to say, David? Rephrase what I'm trying to say.
Yeah. Um, I would say, you know, maybe it could be a dollar amount. Like I have real estate assets in the amount of blank or something. But then I also know, I mean, say if you own a bunch of fourplexes and this is a 100 unit property, it's not necessarily apples to
Yep,
apples.
that goes to the different. Now you're looking at experience, right? Well, there's the three components. You need liquidity,
Mhm.
net worth, and experience. That's what the sponsor's bringing to the table for these deals, right? That's what you expect from the sponsor, really. That's what the thing that most, when you start to look at a $20 million property, a 30 or $40 million property, that's where things go wrong. Liquidity means they can cover it. They have enough cash assets to cover the payments of the loan for a year. And that can depend on the institution too. That's liquidity. Net worth means they have a net worth equal to the value of the property in a lot of cases. That can vary too, depending on the lender. And experience means they have some sort of acceptable experience with a property of this size. The cool thing about the non-recourse loan is all this can be reused on every non-recourse loan. That's the difference between, say, a person buying, single family homes. The single family home deal doesn't work that way, but a non-recourse loan does. So once a person has these three requirements for any one type of property, they can go from property to property to property and use it on each one independently. There's no accumulation required. That's the genius of buying these large properties, right? That with a non-recourse loan. Recourse means you have to cover it yourself. That locks up all those resources, right? A single family home is a recourse loan, and it locks up all those assets on your balance sheet, and you can't use them on the next house. And so at some point you buy 4 houses and the bank goes, I'm not giving you another loan. You already have 4 houses. You're already tapped out.
Gotcha.
Right?
Yeah.
So I know I'm not dealing with the exact question you're asking, but somewhere in this needs to be a better system. And I think the Geek Group is sitting on 20 people with probably some level of experience to do certain level of properties. May not be this one yet, but somewhere in this is an accumulation of liquidity, net worth, and experience that we could get around this sponsorship, this sponsor problem, and submit more LOIs that are taken more seriously.
Yeah. Okay.
Okay, so I apologize. I'm not really giving you a good answer, but part of me is searching for this too, because it's it's the classic problem of all syndication educators, right? Their students are meeting this problem. They go, go talk to the sponsor, right? They just push you off onto the sponsor. But at some point, Jim can only talk to so many people, and no way he can check every LOI that people are sending.
It's true. It's true.
So, and that's the same problem with us, right? We just ran into a problem where we just couldn't look at enough deals to be involved in it. And even with Jay's team, they have 5 people on the team. They're submitting 2 LOIs a week, and I couldn't check them. I'm like, you guys, just send the LOI. Put it on your paper with your company name, send it. And if you get it, now call everybody and see who's going to cover it, right? You're good enough at underwriting. You're not that far out of the ballpark. Somebody's going to buy this at 12 million. How are they going to do it? They're going to do it. A bank's going to fund this.
Now, the only thing I'm confused here is, so I'm looking at the returns look good, the IRR, the project level, and the LP. Now, when I'm looking at the cap rate, though, they're super, super low. So what's going on with that? I mean, I would figure.
Well, and that's back to that calculation where I took the calculation for that off of, it's actually super high compared to, go back to property 1 tab where we were down at 2%, right?
So
this is the 2% cap rate is kind of the real number here. I just used some of the renovated numbers to get a starting point so that I could get a number to refi at and a number to sell at. So go back to comprehensive again. And go back to the steps 1 through 6 or whatever, back toward the left. So we've got it at a 5-year hold. And we've got no refi on this property. The refi is turned off.
That was
going to do have
about refinancing. If it
and you can play with those numbers. Change your hold numbers. Where's the hold up there? Is that step number 7?
Step 5.
There you go. Make it 4 and watch the IRR as you do it.
Wow. Yeah, it keeps going down. And if I make it 10, it goes way up.
But what you're looking for is that crest. Right at about 5, go to 6.
18.
So you got a couple point jump. Go to 7. You're looking for the jump to slow down. Look at how little it jumped. It only jumped like 0.3%, right? I can't totally see it, but it looked like it only jumped between 6 and 7. So here's the theory. the advantage of fixing up a property and sell it is time based. The quicker you can do all this, just like renovation, if you could renovate all 108 in the first month, you would now get the benefit of all the rents of those. It can't happen. It's a theoretical concept we're talking about now. But if you could do all this improvement, just like your flips, if you could compress the time of buying the house, fixing it up, and selling it, you can magnify your returns because it's based on time. Right? How long's a typical flip take you? 3-4 months?
Yeah, well, from time it gets sold, it's usually typically 3 to 6 months.
Okay. So say theoretically you figured out a way to do it in a day, right? All the money you made is not now divided by 6 months. It's divided by a day. The returns go astronomically up. So what's happening here is the improvements are producing a return, but at some point the time gets to be too long and it's less and less and less and less return. And if you could go out long enough, it would be a negative return because you're doing this value add over a certain moment in time, right? So you're looking for the hold that kind of is the best, the most return for the least amount of time. In terms of if it starts to decline with, if you hold it one more year and only get 1%, why hold it one more year? Sell it that, you want the time more than you want the percent at that point. And then you can toggle on the refi.
Okay, so let's see.
And your loan set at, let's see what your loan's set at. Your loan's set at 10, let's see, 75%.
75, 3.25.
Interest only. Yeah.
So I think I did interest only for the first 3 years.
years maybe.
Did it have that on here?
Yeah, it's 36 months there. See it?
Okay, yeah,
You're right by it. There you go. Yeah.
Yeah, so 3 years.
So your refi set in the third year, didn't your return jumped way up?
Oh wow, it sure did.
Yeah, and this model is not completely sophisticated at modeling the return of principal to investors. Because there's a couple of things here. Look, if I'm an investor, I want 3 things. I want that depreciation to equal my investment. I want my principal back early if I can get it. And I want to double my money as fast as I can. So the principal back would be 2 ways in my mind. There's probably a lot more. One is you refi the property and give me some of my principal back or all of it. Right? The value of the property goes up enough that you can refi it in the third year and give me back all my principal and leave me in as an investor. Now my return's infinite, right? It's that theoretical, whatever return is over 0, it goes infinite at that point because you can't, that's not a calculation that can be made. I get to take my principal and go into another property with it. And again, if you could return my principal in a day, I could take the same 100 grand and go into 365 different deals in a year if they could all return it to me in a day. Right? So I love all those features of an investment. I want to see that principal come back. So that's what the refi is for. The model isn't great at showing the return of that capital to investors, but that's a big feature of what I hope the simulator model is that I get out eventually. It models that idea that investors are receiving their principal back early.
Yeah. And what can you explain this where it says forward 1 year for the refinancing NOI? And you could toggle, you could do trailing. Oh, never mind. So trailing would be you're basing it off the previous year, and forward is like you're going for pro forma. Is that what I understand?
Yeah, I think we normally use trailing year, but there can be some situations where you might want to do it in the beginning of the year. That's always flexible in there. When do I actually refi? Is it at the end of year 3, at the beginning of year 3, right? If I'm refining in year 3, am I doing it somewhere in the middle of year 3? And all these models can only be so accurate. So a lot of it is being, estimated in there when that's actually happening.
Okay. And then
well,
another thing I was going to ask really quick was, so do I need any reserves right now? Or I don't think I do. I think they removed that for the
I think it's removed right now, but I got to be honest, I haven't thought about that in a month or two.
me neither.
Eric Stewart talked to us about it on his call a couple months back, and it was only on loans, well, which this one may or may not be. It was on loans of 6 million and below, and they didn't want 12 months held anymore. They only wanted 6 months held. So I don't know the current status on that.
Okay. All right.
Do you have your loan broker too that you're talking to?
Yeah, I mean, I'll reach out to Eric. I have another guy that's in Vegas that I've been speaking to as well, but I think I will call Eric on this one just to confirm.
And I would be curious about when you're talking to Eric, ask him because he's a sponsor too. Ask him what he's putting in for rent growth.
Okay, let me write that down.
You know, those are the things that are shifting these models to work. That's what every buyer's thinking right now. What's my rent really going to grow at? I think that's the calculus.
Okay, and yeah, because so these numbers that these numbers that I based it everything on, that I underwrote it on, was based on what they said they could get me here.
Okay.
So I was like, hey, if they said they could get it, then they could get it. So
Yeah,
just
I hear you. Yeah, that's what you're doing when you're doing an offer like this. And then
yeah,
if you get into, if you're under contract and you can't, now you get to go back and say, I can't get those numbers, right? And we're gonna have to change the price.
tighten it
That's
up.
called retrading. Nobody likes it. Under certain circumstances, it feels very sleazy, but under normal circumstances, look, it's very often we get into escrow or under contract, as it is with commercial properties, and find out additional items on the property we didn't know when we made the offer. It's legit. You have to retrade at that point. You know, the seller could have told them to you back when you did the LOI, and they didn't, they couldn't, and they can't, whatever. Now it's got to be, the price has to be adjusted. It's a real thing. If they want to drop out of escrow, they can, but in a lot of cases, all of us start to get, we start to go, the momentum builds. We head down the road for 3, 4, 5, 6, 8 weeks, and now nobody wants to back out. So just make adjustments and close the deal.
Yeah. And my only other concern was now in Prop 1. So again, in the comprehensive, these numbers look good. But then when I go back to Prop 1, I have a
They
negative
look
cap.
terrible. Well, go back to comprehensive and go to step 14 and look at the pro forma, because I think our first year is negative.
Oh, is that what it is?
I think our cash flow is negative on the first 2 years, maybe on this.
Okay, so let's go.
Scroll down, maybe. Let's see here.
Okay, cash flow. Well, no, cash flow is
It's
136.
interesting. I mean, it's all based on us saying what rent we can get for these units and how rent is growing.
Okay.
So we're painting a very rosy picture right now, David.
Yeah.
We really are. But
Yeah.
I don't know that it's not accurate.
Yeah, because this looks good here at 136.
Yeah.
But then
Yeah,
here
I'm happy. I got a positive cash flow from that.
it's negative 227. Here,
Yeah.
cash flow before taxes. So that's kind of scary for me.
So it's starting to roll the renovations of the first year on those 20 units into the first year's cash flow.
Oh, is that why it's negative here?
Yeah. Yeah. It's not doing it here, but it is there.
Got you.
That's why it's doing it. And so again, we're painting a very rosy picture, assuming we can do all those things in the first year.
Okay.
Yeah.
All right. Oops. Okay.
All right. Well, I think you're thinking about the LOI. I think you should go ahead and type one up. You might not actually send it. You might talk to the broker and figure out sending it might hurt my relationship more than help it.
Okay. So here,
But
sending LOI maybe under status, submitting LOI.
yeah, for us, this was I don't know if you need to update that too much. Put it under your to-do list, and that's where it gets done type thing. And then you might be talking to, maybe you're trying to call Jim and talk to him about what he's underwriting at and what you're having to underwrite at to make things work, and how does he feel about those, those kind of things.
Okay. They're both in Dallas. So.
I love it. I mean, can't get much hotter than Dallas.
Yeah. Okay.
All right, let's see. Go back to our L10. What do we got? We just got rate and wrap.
Okay.
What's
So,
your rating?
well, considering I'm going to be submitting 2 LOIs, out of 10 out of this meeting.
Yeah, and I think you can verbally talk about all that with the broker and see what their requirements are and see where you're headed with that and sort of feel out the situation. Yeah, let's see how your gift of gab does.
Okay.
All right.
All right.
Okay, so we're not meeting anymore. We're taking the next month off. Is that what we're doing?
Yeah. So
All right.
let me see. Let me stop. So right now, so here's the thing. Next week, I got to leave town for a week, and then I think the week after that, we're gonna go